Berkshire Hathaway just sold 1% of its stake in Chinese electric car maker BYD. News of this seemingly small stock sale sent BYD shares down 12% in one day on the Hong Kong exchange. This is surprising because BYD is a highly successful company and its cars have been outselling Tesla in China for years. BYD recently reported strong numbers for the first half of 2022. Net income was $521 million, which is triple what it was for the same period in 2021. It is not like Berkshire Hathaway CEO Warren Buffett to sell shares of a highly successful company. So, why such a dramatic reaction to such a small stock sale? Well, when Buffett exits a stock, lots of other investors do as well. Do Wall Street investors and analysts think that this is a sign of more stock sales to come? But, why would that be when BYD has been an unmitigated success for so long? This video initiates our coverage of this extraordinary development and financial news related to China. What does it mean for the future of the US economy? And, what does it mean for the future of the United States? But, before we get into all of that, please hit the like button and leave a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of future videos when they are released. Wall Street analysts are floating many theories about why Berkshire sold the shares and the reason for such a huge reaction. The 12% fall in BYD shares is the biggest price drop in BYD stock in 2 years. Neither Warren Buffett nor any Berkshire Hathaway offered to comment on this high-profile stock sale. BYD also refused to comment. But, Buffett's silence on the BYD stock sale is only fueling the speculation about why he sold. This is most likely profit-taking, said Carrie Goh, Chief Investment Officer at Kamit Capital Partners in Singapore. BYD has done very well for them, especially in the last 3 years, Goh continued. It's not their style to sell just because someone says China is uninvestable, continued Goh. Goh was asked whether Buffett could be preparing to sell more of his BYD stake. It was hard to second-guess the titan of investing, responded Goh. This is not the first time that Berkshire Hathaway has exited a stake in a large Chinese investment. In 2007, Buffett sold his entire stake in PetroChina, the largest Chinese oil company at that time. The sale of the PetroChina stake was staged over a period of 3 months. It is very unlike Warren Buffett to sell shares of a successful company. He is famous for saying that his favorite holding period for any investment is forever. Still, it is not as though Berkshire Hathaway never exited large stakes in major companies. In 2020, Berkshire liquidated its entire positions in the 4 largest U.S. airlines. Then, in 2022, Berkshire sold its stake in Wells Fargo Bank, a financial institution that Buffett had spoken highly of for decades. But, there were understandable reasons for these large and sudden stock sales. In the case of the airlines, Buffett reasoned that unfavorable macroeconomic conditions made the airline business a bad investment. In the case of Wells Fargo Bank, unethical banking business practices caused Buffett to sour on management. But, China is not the same place that it used to be with regard to investing. The Chinese Communist Party cracked down hard on high-flying financial services company Ant Group. This crackdown forced Ant Group founder Jack Ma into hiding for over 1 year. Tencent, Didi, Huawei, and other successful Chinese companies have also paid heavy prices for the change in economic and investment policies of Chinese Communist Party. Has China truly become uninvestable? On the other hand, this move could be a warning sign that the Chinese stock market is headed for a major correction. Many Wall Street investors and analysts are predicting a recession in the US, and stocks have fallen dramatically so far this year. The Chinese economy has weakened significantly due to COVID-19 lockdowns. And the Chinese property market is in crisis with real estate developer bankruptcies and mortgage protests. The National Congress of Chinese People convenes in October. And, many economic observers are looking for announcements of economic stimulus. There is room for government to help the economy and push up confidence, said a Chinese fund manager. The Congress is being closely observed by the entire financial world to see where the Chinese economy is headed. But, what do you think? Please leave us a comment below and hit the like button. Please subscribe and hit the bell icon so that you are notified of future videos when they are released. Please share this video on social media. Thank you for watching.